Hey traders, in this video we will dive into topics of trend lines and more specifically concept of overshoots. Now, why is it so important to understand channels in first place? Well, it's because we are price action traders. Our goal is to learn to read the chart using the naked candlesticks as they are printing on a chart. As price action traders, we are not relying on indicators that provide lagging data. Indicators cannot predict what's going to happen in the future. These candlesticks that they're printing on a chart, they're forming patterns. Price action is a language that is talking to you, and if you learn to understand the language of price action, you will get the upper hand and you will be able to understand where the market is going. For that reason, as price action traders, we know that there's always some form of a pattern and we need to find and identify the proper channel. Now, generally, the way we identify the proper channel and the way we confirm it, the channel is confirmed with 3 touches. So we have a first touch right here, second swing, and we have third swing confirmation. First 2 swings will set up the trend line, third swing will confirm it. Now this is important because as long as this channel, this uptrend is in play, we are looking for buying opportunities. We're not thinking about selling. We're only looking for high probability setups to go long. After we get a break, we expect for prices to create new extreme. That is because we are following the trend line rule. Now, but sometimes it can happen the market may form an overshoot. Now, break of a channel is break of the bottom trend line in uptrend and upper trend line in downtrend. But overshoot is the break with the direction of the trend, meaning overshoot of bullish channel is break of the upper trend channel line. Now, overshoot is an unnatural activity in the market and it can cause a little bit of a mayhem. Sometimes overshoot can lead either to break of a trend line or straight up reversal. Now, a lot of times when you have overshoot, you want to be careful taking a high probability setup at the key entry point right after overshoot because it can generate strong momentum in opposite direction. But sometimes, and this is not so common, but it can happen, overshoot may even create a brand new trend on its own. It may create such a strong momentum that new trend will start. All right, so let's take a look at this uptrend we have in front of us. Because we have a shortened option working higher, we have a break and new extreme form, but prices keep pushing above EMA and we keep creating series of higher highs and higher lows. So this can indicate to us that there's probably a wider pattern developing. So we have first swing right here, we have second swing right here, and we have third swing confirmation. So what I'm going to do, I'm going to copy this trend line, put it at the top, and I can see how nicely it's getting confirmed here and how nicely it's getting confirmed here as well. As long as this uptrend is in play, I'm looking for high probability setups at the key entry points. High probability setup is a 2-legged pullback at the key entry point, okay? But notice what happened. Prices broke the upper trend channel line, which is right now an overshoot. And it can lead to break of a trend line or possibly straight up reversal. Notice what happened in this scenario. We straight up reversed into a brand new downtrend. Now, this is not common. Most of the times, 8 or 9 times out of 10, a big uptrend like this, after break of the channel, will create new extreme. Okay, for that reason, once you see prices having a break of this channel, you expect for prices to create new high. You're not selling just yet. Only after prices have moved quite far down and it retraced a large portion of this uptrend, that's when you potentially can start thinking about selling the market. So once prices fell to push above EMA here and push down, this is where I identify and I finally came to acceptance that we're not going to create new extreme. But this is rare. 8 or 9 times out of 10, you will truly create new high. For that reason, once I was watching this, I was expecting to get failed second entry short above EMA and continue to create new high. But this is what overshoot can sometimes create. It can create break for sure or straight up reversal. And notice what happened. We got a brand new downtrend. Once again, confirmations at the top, confirmations at the bottom, massive overshoot down. Now this is such a steep brand new downtrend that a lot of times there can be a brand new downtrend form. So when I was watching this, I even tried to find possible downtrend like this, but even this steeper downtrend has overshoot right here. So once again, it can lead to straight up reversal, or it can at least break the channel. And notice what happened. Once again, we didn't create a retest for a new low. We have overshoot into bullish uptrend. So another rare scenario, but you guys can see it's important to talk about this. It can happen, and these overshoots, it is unnatural activity, it is way too oversold, and it will create strong momentum in opposite direction. And our last example, we have 3 overshoots during today's session. Uptrend working higher, 1 swing, 2nd swing, 3rd swing confirmation, 4th swing confirmation. I'm just gonna copy it, put it at the top, nicely fitting channel, and prices created an overshoot, which means I gotta be leery about taking longs, because what can happen, it can generate strong momentum in opposite direction, break the channel. Now, notice what we have here. We have a downtrend working lower with the break, new low formed. You still expect new high for the uptrend, and notice new high has been reached. Now take a look at this example right here, and I'm going to show you guys example of similar structure from March 25th. All right, so here we have the chart from March 25th, and you guys can see almost identical price action structure. We have confirmation here, confirmation here, confirmation here. It is nicely fitting off the highs as well. So this is a bullish uptrend. We form an overshoot, and notice what we have. Leads to break of a channel, downtrend working lower, created a break, moved to a new low, and after that, we expect for prices to create new high following the trendline rule. Overshoot generated strong momentum in opposite direction, and prices still created new high, because this is what is mostly going to happen. And notice almost identical example. Overshoot leads to a break of a channel, a new high has been retested. Right now we can correct. So we had example of 3 overshoots, and you guys can see how they can mess up the trendline rule, because it is too strong, too oversold, too overbought, and you can expect push in the opposite direction. Let's now take a look at the structure, and let's analyze the high probability setups. Because we started with big news event which created and caused this massive sell-off. I first found this channel working lower that needed the break new low, but a lot of times such a massive sell-off will create strong momentum and kind of like a wider downtrend. So just to be on the right side of the market, I still followed this wider downtrend. Now notice what we have. We have a break of the channel, new extreme formed, which means from this point on, I'm not looking for shorts just yet. Notice I have a new low, first entry short, pullback, second entry short. First leg up, pullback, second leg up. This is a 2-leg up pullback, second entry short at the key entry point at the EMA. This would be a high probability setup, but right now, since downtrend had the break and a new low, I need to be careful. For me to safely resume the downtrend, I need extra confirmation and I need to take a lower high. So we see second entry short and we see lower high. Now technically this is not a lower high because it formed micro double top, but I'm calling this a lower high because it is very close and you can basically treat it as lower high. Technically it is still continuation of the second entry short, but there's absolutely no problem treating this as lower high. Right now we have confirmation of second entry short, and this was my first trade for the day. Nice bearish bar. Notice the triple test, small resistance, uptrend played out with the break and new high, indicating that the buyers are over. And I'm not only drawing the main patterns, I'm also drawing these trend lines for the smaller corrections. Now after that, we actually have micro double top and we have additional push and additional the true lower high. So I'm going to mark this setup. I don't want to confuse you. So this is technically the continuation of the second entry short. And then we have lower high, the true lower high, because this high is lower than the prior bar. But you guys can see EMA keeps holding prices, and at this point on, bias is strongly bearish and we can now resume the sells. Even though you have a new low, you don't want to take the second entry short just yet. Now after that, market went into consolidation, smaller the trading range, and we strongly reversed higher. So once you have a new low and you're strongly pushing above EMA, I need to adapt to structure. So once we are already up here, I need to identify a brand new channel. And like I mentioned at first, I would be only watching this channel right here. And we have new high, first entry long, pullback, second entry long. You guys can see this is a 2-leg up pullback on the larger scale. New high, first entry long, pullback. We actually have a tick higher here. When I was watching this live, I had no trigger above this bullish bar. And now that I reloaded my data, I can see that we have a new high, first entry long, second entry long already right here. But when I was watching this live, I had my second entry long all the way down here because I didn't get triggered above this bullish bar. So I treated this as visual, first leg down, pullback, second leg down. If you had trigger here and you enter this, I can see why. You're a little bit closer to these highs and it's a little bit feels like at its high because the second leg may follow. But if you took a chance right here, you follow the rules. But like I said, I didn't have trigger here. Interesting that now that I reloaded the data, I actually get a trigger right here. But there was no trigger at the time, so I'm playing this as a new low, second entry long right here. But this second entry long is below EMA and is a doji bar. But notice it is a visual two-legged pullback. So this is and downtrend has a break and a new low, indicating to me that sellers right now are not in control. And notice what we have. We have additional trap and a strong push above EMA, big bullish bar after this two-legged pullback. So this is a great high probability setup, close above EMA, strong bullish signal bar. And right now, from this perspective, I have a break and a new high form. So I need to be patient. For that reason, I cannot just take a second entry long. This is not marked as a high probability setup, even though chances are that you're probably going to push higher. But for the same reason, just like here, I want to see confirmation high-low, because once you have a break and new high, you can get trapped on a second entry long. Great thing here is you have a break and new low, and notice another first leg down, second leg down. So this is the high probability setup. This is how it looks like. Market likes to move in pairs of twos. But once this second entry long works and it confirms the trend line, I'm just going to copy it, put it at the top. You guys can see you have a high-low confirmation of this two-legged pullback, indicating that the bullish momentum is strong. It is at the EMA. It is bouncing off the trend line. Decent high probability setup. Now the structure is bullish, following the rules, only looking for longs, but from that point on, we didn't really touch exponential moving average here. We have another second entry long, but it's far from EMA. You can easily get trapped. Then you get another second entry long, two-legged pullback, but too high, no room here, directly into this trend line. You don't know that it's going to create overshoot, so this is not a great entry. Then we have overshoot, which we talked about, which means you don't want to take a second entry long after that, plus you're not even touching the EMA. So you guys can see, follow the shortened downtrend. You can definitely create break and a new low because it can lead to break of a channel. Prices are pushing lower. You have a shortened break, new low of the downtrend. And at this point on, I expect still new high for the uptrend. So I'm paying attention if I get failed second entry short above EMA, but I never get failed second entry short above EMA. Now, the correction may take a little bit longer. So once we created this leg down and we attempted to push higher again, at this point on, I'm still expecting for prices to create new extreme, because this is the main pattern and bigger pattern is taking precedence. The shortened corrections shouldn't be so significant, but once it rejected prices here again, the exponential moving average, this is where something is starting to be wrong here. And at this point on, the last rejection and the downtrend started. So a little bit unusual, but it can happen occasionally where you will not retest new extreme even when the uptrend is this strong right here. But I don't think it is safe to go short, especially on a bunch of first entries while the uptrend is still in play for the most part. You didn't even get a good second entry short or lower high, none of that stuff. Now we have strong overshoot. This is way overdone, way oversold. We have new low formed, first entry short pullback, second entry short. Now, you don't want to take second entry short right after overshoot, but you can take a lower high or high low after the second entry, because even during overshoot, because that can confirm the second entry short. So this was my second trade for the day, lower high after second entry short, and you guys can see they tricked me. The overshoot was way too strong. We didn't even manage to create scalp. It was a little bit of a correction. Prices needed to create break new high before eventually pushing lower. I was a little bit frustrated that this trade didn't manage to get the scalp. I was almost having a perfect week and they got me right here, but it was still decent trade to take a chance on. If you look at this like this, lower high, confirming second entry short, the overshoot was just way too strong in this instance, but it's a small bar. Then you have a break and new high. Had this bearish bar close below EMA, I would have liked going short here. Then you have a lower high, but it didn't tick higher. If we ticked higher above this bullish bar, it would have been great lower high to still attempt to create new low, but no real great setup for us to take a chance. And right now something is starting to change. We are not breaking lower. New extreme is not being formed. We are starting to go sideways. We have new high and we have first leg down, pullback, second leg down. And after this two-legged pullback bounced and pushed above EMA, this is right now confirming the channel. So right here, you don't want to take a second entry long just yet, because there is still possibility that this downtrend may create push down. But once it bounced above EMA, high-low confirmed the second entry long, even the visual two-legged pullback, what is going on here. This is where you can go long, and market kept pushing higher. We already talked about the overshoot, what it can cause. We have another high-low after second entry long. When I showed you the example from March 25th, I actually took the high-low on that day, and I remember barely scalping out. So for that reason, I didn't really like marking it, because you really never know whether you're going to make the 8-tick scalp during overshoot. You're kind of playing with fire. This uptrend can create and will most likely reach new high. For the most part, you will probably create the break. So you want to be careful. Strong rejection down, break new low, indicating to us the downtrend is over. So notice I'm just following these short-term trend lines, and notice how price action is following these channels. After we have a break and new low, right now you're watching for push above EMA, because push above EMA will indicate resumption of this uptrend, an opportunity to take a high probability setup. High probability setup is either second entry long or failed second entry short above EMA. Here you get a failed second entry short below EMA. You get a high low below EMA. So this is an area where you figure you're going to most likely push higher, but never really get the good chance. Then we bounce above EMA again, and we form new high, first entry long, second entry long, first leg down, pullback, second leg down. This is a two-legged pullback. There's a small little quadruple bottom that is holding. So this is a failed second entry short, new low, first entry short, second entry short failure, and a second entry long. Two high probability setups in one. Not the easy setup to spot, but one of those setups where you can take a chance, because it's a two-legged pullback, even a failed second entry short, support is holding, and you expect to get new high for the uptrend only after price is pushed above EMA and resume the bullish momentum. This is where you're getting the confirmation that the structure is strong and you have a new high formed. First entry long, pullback, second entry long, two-legged pullback at the EMA, at the key entry point. You expect new high to be reached, just like in this example, and decent high probability setup before market close. Interesting structure today. You can definitely make a case for me marking a couple more setups, slightly more aggressive. Overall, very interesting that overshoots played such a major role that they managed to completely reverse the market almost every single time. Only this overshoot finally followed the trend line rule after creating the perfect new high. Other than that, these overshoots can be a little bit tricky, but right now you know how to handle overshoots in the future. So I hope the video was helpful, educational. I'm gonna see you guys in the next one. Take care, everybody.